Yeah, so DeFi is like a supercharged word, and I think rightfully so. And my honest opinion is that the vast majority of DeFi is kind of this like this grift and this scam and these kind of like excuses to create these tokens and these narratives, and all of that. Like I very much agree with. But there is this small, like tiny subset of it that is very legitimate, and that it's a noble cause worth building towards.
Hey everybody, welcome back to the Blockware Intelligence Podcast. This week I have on David Seroy. David, welcome.
Thanks, appreciate you having me.
For sure. So for those that don't know you, who are you, what is your background, and how did you get into Bitcoin?
Yeah, sure. So I'm no one special. For the past 5 or 6 years, I owned a private lending company outside of Bitcoin. I recently sold that company probably about 6 months ago. So now I spend most of my days just kind of like doom scrolling through Bitcoin Twitter and reading any topics that kind of interest me. A lot of that happens to be Bitcoin related, but not necessarily. My introduction into Bitcoin, I guess, I really didn't get into Bitcoin until probably like the 2017 run up. But as much as like, over a decade ago, in 2011, I started reading Ayn Rand and Atlas Shrugged, and that led me to objectivism, and that even led me to interviews with Peter Schiff. And so I was very much kind of a hobbyist of the kind of like libertarian movement. And so when I did finally find Bitcoin and make that connection, I think I was able to grasp it very quickly because I came from that kind of ideological and philosophical underpinnings. I always joke that like, whenever people post on Twitter and they say, tag the person that like got you into Bitcoin, I always tag Peter Schiff because it's true. Like, I mean, over 10 years ago, I was watching his videos and him kind of talking about, gold and capitalism and free markets and him going, down to Wall Street and talking to the protesters. Thank you, Peter, for getting me into Bitcoin.
Nice, pretty funny. Yeah, I definitely think it's a lot easier for people to like see Bitcoin rather quickly if you have like a certain political or like economic bias, rather than if you're, certain like more of like an academic type, I guess, and you don't see, I guess, like the libertarian mindset as clearly as others. You have a very difficult time, understanding Bitcoin. Even if you spend a lot of time looking at it, you still like your bias kind of prevents you from seeing what other people might see.
100%.
So you've been thinking, I know, a lot about like a Bitcoin-based economy, like how this is all going to play out in the long run, how it's going to function. Can you dive into some of your ideas behind, like layered money? I know Nick Bhatia wrote his book about that. I know you're a fan of him. Bitcoin banking systems, and just kind of like the general relationship between like Bitcoin and the dollar. Start with that wherever you want, and can be more of an intro, high-level overview of your thoughts.
Yeah, for sure. So most of the discussions that I have around what will a Bitcoin-based economy look like typically come down to how people perceive credit money in the economy, right? And so specifically, in Bitcoin circles in particular, there's very much this idea that the issuance or the existence of any sort of credit money whatsoever, which is money that can kind of be created arbitrarily out of thin air, like IOUs and really like the dollar, like the existence of any sort of credit money is both incompatible and antithetical with a Bitcoinized world. And in many ways, like I'm super sympathetic to that point, right? Like as Bitcoiners, we champion self-sovereignty, right? We don't like counterparty risk. We think that the issuance of credit money can lead to malinvestment, and that it's this hidden tax that causes inflation and theft, and that and that the dollar is the instantiation of like all of these negative things that we hate, and that Satoshi sent us this life raft of 21 million to like break us out of this monetary madness. Like all of that very much resonates with me, and I think with most Bitcoiners. At the same time, there's this undeniable truth that both presently and throughout history, there is an insatiable desire to issue credit money, to have credit into the monetary system. And while Bitcoin may have solved some of these issues, like the instant settlement and being able to send, Bitcoin instantly over the internet without any sort of intermediaries, I don't think that it completely eliminates the demand and the desire for credit money in the economy. And so as much as we can sit here and preach, self-sovereignty and hard money and incentives and time preferences, I don't think that will ever eliminate credit. And so a lot of people have kind of talked about this, and they've laid out these roadmaps of like, how a Bitcoin economy may work. As early as like, 10 plus years ago, Hal Finney was referencing George Selgin's free banking work on the Bitcoin talk forums. More recently, like you alluded to, Nick Bhatia wrote this book, Layered Money, where he talks about how these hierarchies of money typically form, where you could have Bitcoin at the base and then, these other forms of money on top of that. People like Nick Carter have been talking about this for years, and even more recently, Eric Yakes has written some really amazing work on it as well. And so all of this is to say, like, I don't think that we can ever escape this kind of credit type money from being issued on top of Bitcoin. And so if it must exist, I'd rather it exist on our terms, where Bitcoin is the collateral that underpins the entire monetary system, but we embrace and acknowledge that some form of credit creation is going to happen. Where it's really kind of started to excite me more recently is that, previously all of these ideas that all those people I just mentioned had, they were predicated on using the legacy banking system, that we would give up our Bitcoin to custodians like banks, they would issue the IOUs, and we just have this like huge amount of counterparty risk. But now we kind of have this like small glimmer of light of DeFi. And I think that reignites a lot of these conversations and allows us to bring those theories more into more practical ways. Like previously, if somebody tried to create like some sort of Bitcoin-backed bank or this credit money, I mean, you're subject to the government regulations. Like you operate on this like hidden shadow ledger that you don't really know how much leverage is out there. There's no proof of reserves. Like all of these things prevented a credible system from emerging on Bitcoin. But now I think that we can kind of start having that conversation again because of some of the new technologies that are coming out.
Yeah, very interesting. I know it's interesting how, like you said, there's some segment of Bitcoiners that are, very opposed to credit, period. And then there's other segments, like more maybe traditional finance Bitcoiners that are like, okay, there's going to be some form of credit in the future. And then you kind of have this, somewhat unique background where you were in private lending, so you know kind of more about credit, so that you kind of have the, I guess, perspective of, hey, like this is kind of important, and people use credit today, so that they might use it in the future. You brought up DeFi. I know a lot of people, like the traditional Bitcoin maxi, might cringe a bit. I know I sometimes do, just in reference to what other people have done to DeFi. How do you, can you dive deeper into DeFi, and why would we build DeFi on something like Bitcoin instead of Ethereum?
Yeah, so DeFi is like a supercharged word, and I think rightfully so. And my honest opinion is that the vast majority of DeFi is kind of this grift and this scam and these kind of excuses to create these tokens and these narratives, and all of that I very much agree with. But there is this small tiny subset of it that is very legitimate, and that it's a noble cause worth building towards. And so while I agree with the core Bitcoin ethos that nothing is more important than this kind of self-sovereign, self-custody, deep cold storage, 21 million, all of that, if we simply can only, hold and transfer Bitcoin, the asset, that is not sufficient, in my opinion. We must also decentralize these financial services and these money creation layers. And if we ignore these monetary layers, like this idea of finance, then we really relegate Bitcoin to a life of gold 2.0 in all the worst ways. A world in which central authorities will use this inevitable demand to create credit and to have custody in order to hijack our monetary sovereignty. And we'll see these perpetual issues the BlockFis and the Celsiuses and the FTXs. So I do think DeFi is really important. And while most of that is being done on Ethereum, if we want this Bitcoin world, we want to slowly start bringing some of the good ideas from Ethereum over to Bitcoin as much as we possibly can. And I think a world in which, you have the base layer Bitcoin, but then you have, layers on top of that where you can do credible, trustless, decentralized finance that provide fees and actual use case to block space on the layer one is a very noble vision that's worth pursuing.
Yeah, I fully agree that 95%, 99% of DeFi that exists today is Ponzi-nomics, scamming, and just kind of people throwing money at things and trying to get a return. But I know one of the things that I'm excited about on Bitcoin DeFi is Bitcoin collateralized stablecoins. I think like a lot of people today, we hear the Tether FUD, which whether that's rightful or incorrect, there is an extreme lack of transparency when it comes to assets like Tether. Like, are they actually holding $60 billion worth of T-bills and commercial paper, or is it all a facade? I mean, they are just another company in the Bahamas. So if we had this, over collateralized Bitcoin-backed stablecoin that was very public, there was no trusted third party, I mean, I think that would be pretty valuable. What are your thoughts on that idea of a Bitcoin-backed stablecoin?
Yeah, I mean, it's so important, and like the implications of Bitcoin-backed credit is like, in my opinion, it's the bridge to hyper-Bitcoinization, right? Like, instead of us like pinning these two things where it's like you either have to be in Bitcoin or you either have to be in dollars, like we can create these synergy between the two. If we have the ability to post up our Bitcoin as collateral outside of a centralized custodian and then borrow dollars against that, now all of a sudden you're holding Bitcoin as an asset, meaning you're hoping the store of value goes up relative to the dollar. And because you're holding the dollars as a liability, as debt, as a loan that you've taken out against your Bitcoin, you're actually hoping that the dollar devalues. It's a way for you to effectively short the dollar. And so over this long enough time frame, I think all of us are in Bitcoin because that's what we expect. We expect the dollar to keep inflating. We expect monetary debasement to be happening. And so now no longer is it like, oh, do I have to hold, my savings in Bitcoin or hold it in dollars? It's like you can have both. Like you can have your cake and eat it too. And there's obviously, trade-offs and risks of doing that. But the bottom line is it creates this kind of synergy between it. And so, I think one, it links Bitcoin and the dollar together, but it also links these disparate parts of, Bitcoin development together, right? Like on one hand, you can self-custody Bitcoin in deep cold storage. You don't have to do any of this crazy credit creation stuff. 21 million, that's all you care about. Alternatively, you can, like I said, borrow against your Bitcoin, take out dollars. That single product alone to be able to borrow it at say like a very low or 0% interest rate is a use case. At the same time, people like Alex Gladstein, are really kind of coming to terms with the fact that dollars are very useful, but in particular, censorship resistant dollars. And so we can create these Bitcoin-backed stablecoins for people that are saying, hey, like I kind of like this Bitcoin movement, but like I live in a third world country, like I can't have this volatility, like I need a stablecoin to give them a censorship resistant stablecoin where as they demand that stablecoin, they're indirectly driving value to more Bitcoin collateral to mint those stablecoins. Like that is so beautiful. And then eventually, I'm not hyper technical, but like you could start having these Bitcoin backed stable coins, flying around on Lightning Network via Taro or RGB or what like, John Carvalho and Paulo at Tether and those guys are working on with Hypercore and issuing credit that way. It's like, this is cool. And I think it brings together all of these worlds. So that's, super important to me.
Yeah, definitely. I mean, one of the projects that's kind of doing this right now is Sovereign Zero product, which I've talked about before on this podcast. Talk about it some on Twitter. I've had Eden Yago on the podcast. Now we have you because I know you're at least somewhat involved with Sovereign. And then there's other projects that are also being built on Bitcoin. Fuji Money is another one. I met you in Amsterdam, but I also met one of the Fuji Money guys in Amsterdam too. So there's these products like this, like the Zero product. Can you explain like in a little bit more detail of like how that works and what this is in relation to what we're talking about?
Yeah, sure. So Zero is effectively two products. And so for context, like, you can't build, generalized smart contracts on Bitcoin. So it's done on a layer 2, which in this case would be a sidechain. So there is some level of trust involved. At least for now, and I'm sure we'll touch on validity proofs, in a little bit. But Zero essentially allows you to lock Bitcoin collateral into a smart contract and then borrow against that, borrow stable coins against that at 0% interest. Some people may see this as similar to something like Unchained Capital, where you put in, Bitcoin collateral into a multi-sig and then they give you dollars, But now we're abstracting that on chain, where the Bitcoin will go into a smart contract as opposed to the custodian. And then instead of receiving dollars, you're receiving this new kind of Bitcoin backed stablecoin, and then it's 0% interest for that. That's the primary use case of Zero.
Yeah, it's very interesting, and it's still very new, but there's already, from what I've seen, like 500 Bitcoin tied up in Zero, with about like $4.6 million in lines of credit open that are, basically this ZUSD, this Bitcoin collateralized stablecoin. So it's actually like out in the wild, and it's working. So that's kind of cool, unlike, a lot of other things that people just talk about and never actually gets implemented. But yeah, it's going to be very interesting to see like what happens with this over time. And the way I kind of see it is, people think about this and they hear it and they're like, oh, 0% interest on a Bitcoin backed loan. Like, how is that even possible? And it's interesting because the way I'm thinking about it, and I want to get your perspective on how like it's possible and how it works, is someone is actually, loaning out money to you at 0% interest in a way, right? We have Tether and we have USDC. People are effectively loaning billions of dollars to Tether. They get an IOU token back, USDT, and they're holding that token, and they've lent the billions of dollars to Tether. So the Zero protocol is kind of just connecting what's already a huge market, the stablecoin market, with the demand to borrow against Bitcoin. And these markets are both massive but extremely disconnected. And now there's potentially a new way, like Zero or Fuji money, to connect these markets in a fairly trustless manner. Curious to get your thoughts on that.
Yeah. So I think that's, a pretty good explanation. I'll elaborate on that and say, it's actually kind of borrowing from how, banks work. When you go to a bank and you say, hey, can I get $1 million loan? And they approve you. What they are not doing is they are not taking deposits from other people and then giving you that $1 million. They're instead literally creating $1 million, out of thin air onto their balance sheet. And so Zero kind of operates the same way, right? As soon as you post up collateral and you want to borrow it, say you wanted to borrow $1 million and you posted up $2 million of Bitcoin collateral, those $1 million of new stablecoins are minted out of thin air. They previously did not exist. So being able to lend something at 0% interest is really easy. We just create the token out of thin air. The difficult part is, how do you make sure that at any point in time, anybody that receives those stable coins can say, hey, I have one of these stable coins that I got from Joe. I want to redeem this for $1 of Bitcoin. How can you make sure that the peg always maintains at $1? And so that's kind of where the rub is. And it does that by making sure that the system is always over collateralized. That in that example where if you have $2 million of Bitcoin collateral and then you mint $1 million of ZUSD, that as the price kind of fluctuates, that the system never becomes under collateralized, where there's never more liabilities outstanding than there is assets backing it. So it's an over collateralized stable coin. Some people that are familiar with like MakerDAO on Ethereum, it's kind of like that, but I would say with improvements to prevent the system from ever becoming backed by like USDC or another stable coin. But that's the key is can the system always stay over collateralized? And so it has to be battle tested and modeled out and say, well, what if Bitcoin drops 80%? Is the system at risk of becoming fractional reserve? And while we've done, significant modeling and there's reason to believe that it won't become fractional reserve, that risk does exist. And if it does happen, the key here is because everything is tracked, on chain, because DeFi, you have 24/7, 365, cryptographic proof of how many ZUSD, how many liabilities have been issued against how many assets of Bitcoin. And as those prices fluctuate, you can immediately see if the system ever becomes under collateralized. In that, it's kind of like we alluded to, George Selgin's free banking earlier on in this podcast. Like, part of the reason why free banking works is that you can have note dueling, where if certain, banks, or in this case, protocols, are at risk of going under, where somebody thinks, hey, I think they're fractional reserving, then they can attack that and they can try to break that peg. And so that's just this key part of what excites me so much is that we could have this Cambrian explosion of all of these different, credit experiments where some people are fractional reserves, some people are over collateralized, and over time it'll kind of create this equilibrium where the weakest protocols will be attacked because there's full 100% information transparency, and then the strong ones will survive. So I maybe went off on a little bit of a rant there, but to recap, Zero is built as this over collateralized stablecoin. At any point in time, you can see what the reserves are, and that's how we're able to do it at 0% interest.
Yeah, and it's definitely a very sharp contrast to something like Luna and UST, which obviously completely blew up. It was a very under-collateralized stablecoin that was kind of like financed by like fake yield that VCs, I guess, were kind of funding into UST. They were like, hey, earn 20% interest. And then every time, people put money into that, Luna goes up some, and eventually it just kind of all unravels to zero. So very different from that. And kind of like you said earlier, or like we talked about earlier, it's potentially a lot more transparent and trustless. Like Tether is so very untransparent. Even USDC, there's counterparties and governments that, can censor or blacklist, addresses. So this is like completely different. There's not really a middleman. There are potential problems, like we talked about. Like it's not 100% trustless. It's not on the base chain Bitcoin. And you mentioned like validity rollups. Can you talk a little bit more about that, or other things that might make DeFi on Bitcoin more trustless?
Yeah, sure. So for context, I want to kind of explain the sidechain concept, really basically. So we mentioned how you can't do these kind of fully expressive smart contracts on Bitcoin, which is a feature, not a bug. We want this simple base layer. So people created these layer twos, these things which are called sidechains. A sidechain is a separate blockchain, and what you can do is you can take your Bitcoin from the Bitcoin main chain and you can bridge it onto the sidechain. The issue is when you bridge that on there, it's technically an IOU. There's some sort of like federation, which is, you can think of it as like a complex, multi-sig that creates this new Bitcoin on this side chain that gives it all of these kind of, powers and allows you to kind of create these smart contracts. But the trade-off is you have this like counterparty risk. So for years, most of Bitcoin, it's like this, the holy grail is like, can you create this trustless two-way peg that you can have a similar type setup where you can bridge into another ecosystem, but it's not, a trusted IOU or a federation that's issuing that. And, to Ethereum's credit, like they've had some amazing work that's been done on this front with things that are called, they're referred to as ZK rollups. They're probably more properly should be defined as a validity rollup. But this would be a way to create this kind of trustless two-way peg between Bitcoin and another ecosystem. And you can think of a validity rollup almost as like a trustless compression technique. So you can have this separate blockchain that you can bridge your Bitcoin onto, and it can perform all of this complex computation and smart contracts, and then you can compress it into a single proof. That blockchain, it can be owned and ran by Darth Vader. It can have a single node. It can be the most trusted and centralized thing ever. But when they create that compression proof, they have to mathematically prove the validity of the computation that was complete. And so when you bring it back and you try to submit that to Bitcoin, the Bitcoin main chain would verify and say, hey, you submitted to us this proof. You cannot forge this. So great. Now we will transition the state and essentially say, hey, we validated that, David transferred 1 Bitcoin to Joe. And so this could allow us, again, that trustless two-way peg where you can have these isolated ecosystems on Bitcoin where you could have, shielded transactions, you could have DeFi, you could have like anything you could possibly imagine, including like just scalability benefits, things that don't have trade-offs like Lightning and liveness issues. There's a lot of cool things that could happen with a validity proof. Now, the trade-off is, you'd have to bring in a soft fork in order to get that done. And so you'd have to have something like recursive covenants, where essentially people could pool their Bitcoin into a single UTXO. So, we have this UTXO, and then you and I can join that, or we can exit it. It's permissionless, but once you're in that, think of that as like a separate little side chain there. And so that side chain, or I should say that UTXO, operates as this kind of like validity rollup where we can do all of this, computation, smart contracts, and the state transitions get submitted into the UTXO. The Bitcoin main chain verifies the proof, and all is good. That's probably the extent of I think how in depth we can get into it. I think it's something that a lot of Bitcoiners should at least entertain. And there's a researcher who also works on Sovereign named John Light, who was enlisted by Alex Gladstein and the Human Rights Foundation to write this research paper on Bitcoin validity rollups. It's an amazing, amazing paper, and I really encourage people to check it out. And maybe in a very conservative manner, years down the line, we could implement validity rollups. I think it's technology that warrants at least a conversation.
Yeah, definitely. It's certainly something that I've been diving into more recently over the past few months. I actually reached out to John Light, who wrote the paper, and we're going to have him on the Blockware podcast to have a much more in-depth conversation and the trade-offs and the risk associated with it as well. But yeah, it's very interesting because, Blockstream, Adam Back, he's a proponent of sidechains. He has this quote that I saw at the Amsterdam conference that sidechains are innovation without speculation, right? It's a way that we can bring that programmability, that scalability, that privacy to Bitcoin in a way, if we have some technology like validity drive chains, that makes it more trustless in the future. So it's definitely very interesting, and it'll be cool to see how the conversation progresses over time. I want to talk a little bit more about the Zero protocol specifically. I know like Sovereign has issued in the past, they issued a Sovereign token. How is that related to the Zero protocol?
Yeah, well, the Sovereign token isn't needed for anything. Really, you can go in and you can bridge on to RSK, which is the side chain, or interact with any of the protocols that Sovereign has built, like Zero, and you don't even need to know the Sovereign token exists. For Zero in particular, you just bridge over your Bitcoin, you lock it into the smart contract, and then you choose, how much of stablecoins you want to issue against it. The purpose of the SOV, or the Sovereign token, was frankly, I think the developers needed it to bootstrap. Like not everyone is going to build, freely open source. As much as that's a very noble pursuit, there are financial incentives at play, and that allowed the team to kind of, build out and bootstrap a lot of these protocols. It could be seen as a governance token, whether that has use or not, or even pseudo equity. I'm not going to take an opinion on whether it's, the SEC is going to come in or whatnot, but that's kind of the role that it plays. The bottom line is the Sovereign team, in my opinion, is much more missionary than mercenary, and they've built this out with the Bitcoin ethos in mind. That they didn't want to introduce another shitcoin where it's oh, you have to use this to pay gas fees, or this is a utility token or whatever. If you don't want to use it, you don't want to touch it, then don't. It's really that simple.
Yeah, definitely. You were in a Twitter space with Eden Yago from Sovereign, who's a big proponent of Zero and helped create Zero. And also, I think Corey Klippstein was there and Samson Mao was there. And you came up for a split second. You asked some really good questions and you made some really good points. And you talked about, and we kind of touched on this a little bit earlier, but I kind of want to get more of your thoughts on it, about a potential flywheel effect. I think that's the words that you used of, there's this demand to borrow against your Bitcoin at a very low interest rate, potentially 0%. And there's this demand for dollars that are censorship resistant, no trusted third party. Can you explain the flywheel effect between those two demands and how Zero connects them maybe?
Yeah, this is one of the most exciting prospects to me, right? There's kind of this this chicken and the egg problem, and somebody says oh, please use our DeFi protocol, and we promise it's good for Bitcoin or whatever. I think the approach that we're taking is look, if you don't want to use it, don't. But this is a legitimately really cool thing, the ability to unlock funds from your Bitcoin in a relatively trustless way. That is super cool. And so like we're not really asking for anyone's permission to say like, hey, come and use this. We're just providing products that actually have real world use. And so the flywheel that you alluded to is twofold, right? Like one, people clearly want to borrow against their Bitcoin. Like Unchained Capital, amazing company. Like so incredibly grateful for what they've done in the community. But they're charging like 1% annual renewal fees and like 12% interest or whatever it is. Like a DeFi product where you can potentially get that at 0% interest rate and a small origination fee, like that has huge demand. And I think that's why we're seeing growth in this. Additionally, there are these people that we talked about and that Gladstein has referenced that want this kind of this censorship resistant dollar that has maybe more transparency than Tether, that can't be subject to regulation if somehow the government ever like shuts down Tether. And so these two things together create a flywheel effect. Some people, they don't care about stablecoins whatsoever. They just care about borrowing their Bitcoin. So they'll lock in their Bitcoin, they'll mint stablecoins, which creates liquidity for the people that demand the censorship resistant dollars. Some people that demand dollars, they don't give two craps about Bitcoin or borrowing against it. They want dollars. So as they demand more of these censorship resistant dollars, that then creates that then forces more people to lock up collateral in order to mint the stablecoins. And so we're tying together these two worlds and we're creating this flywheel effect where it's kind of like each one perpetuates this kind of circle of growth. And I think this will naturally happen because of the human incentives involved. And it goes back to what I was saying, where it's like, we're not sitting here begging and being like, oh, please, like use this protocol, use this protocol. It's like, hey, it's there if you guys want it. I just happen to think that these two products are things that people demand. And so it will naturally create this flywheel effect.
Yeah, certainly. And to make a point, like it's definitely not perfect by any means. And I wouldn't recommend putting like 100% of your Bitcoin stack in anything like Zero or Fuji. But it's certainly better than like the alternatives that exist today, right? Like it's way better than having locked your Bitcoin up in BlockFi and Celsius, tried to borrow against it, and you recently woke up over the past few months and you're like, oh shoot, they don't have my Bitcoin anymore. So it's certainly better than that. I mean, there's different risks than that centralized solution, but it's very interesting. So I know a lot of what Zero.
Well,
go ahead,
quickly, Joe. I do want to make sure I hammer this point home. Like, I'm not sitting here and saying that this is risk-free. Like, what we're introducing, you're trading essentially this kind of like centralized custodian risk for something like smart contract risk. And so I think people should definitely proceed with caution. While the code has been audited and it's been working functionally great, like these things will gain Lindy over time. And I don't want to come off as the guy that's sitting here and saying everything is safe. I think caveat emptor, buyer beware. But these are cool things that are worth experimenting with. And over time, we hope that they will become extremely trusted and robust. And I just want to make sure I hit that point home.
Certainly. I liked how you brought up earlier, it's kind of two different products, how it's like one product is borrowing against your Bitcoin. The other one is holding this censorship resistant stable coin. And to me, it's actually kind of interesting because a lot of Bitcoiners may immediately think, oh, I want to borrow against my Bitcoin and like either buy more Bitcoin, buy real estate, do something else, buy treasury bonds and collect the spread. But also Bitcoiners could be like, okay, I think Bitcoin, like last year, I think Bitcoin, I didn't think this, but I should have thought this. I think Bitcoin is going to go down. Maybe I should like sell some of my Bitcoin and hold dollars. And if I want to hold dollars, the best dollar to hold is this new dollar that's censorship resistant that can't be taken from me. And then when I want to go back into Bitcoin, I can immediately just market buy a significant amount of Bitcoin without a bank by holding that sovereign dollar. So Bitcoiners could be, using dollars just if they're speculating that Bitcoin might go down in the short term, or if they're, long Bitcoin, they're like, hey, I want to get more Bitcoin. They can borrow against their Bitcoin, get dollars, and then buy more Bitcoin. So there's kind of like Bitcoiners could be on both sides of this, product, just depending on what their bias is for the price in the short term.
100%. Yeah, I couldn't agree more.
So I know Zero has been based off something on Ethereum, like you mentioned. I think it was called Liquidity. What problems has that have, if you know them? And then, why do you think an algorithmic stablecoin like this hasn't caught on? I mean, the biggest stablecoins in the world right now are Tether and USDC. And we have things like DAI, and we have things like Liquidity. We have this new ZUSD, the new Bitcoin-backed stablecoin. why do you think those haven't caught on yet?
Yeah. I'm sorry. Can you remind me the first part of your question? So why haven't
Yeah.
the
So
stablecoins caught on?
like liquidity, which was
Oh,
what
right.
Zero was based off of. Why I know it's like I think they have like a 200 million or so of LUSD, which is their Ethereum over collateralized stablecoin. Do you know like what problems liquidity has had and like why that's not a massive market?
Yeah. Okay. All right. So for context for people that don't know, yes, like Zero, what Sovereign built is based off of, what Liquidity, this protocol on Ethereum built out, right? So the kind of like chain of events is like, years ago you had MakerDAO that issued DAI, which is this over collateralized stablecoin. And then in my opinion, a protocol like Liquidity had modified some of that and improved it and brought it to Ethereum. And then now, Sovereign is trying to bring that to Bitcoin. Liquidity, in my opinion, has been, modestly successful, but it has had some small issues. Like the peg has maintained itself a little bit over $1. It hasn't ever dropped below $1 for any significant amount of time, and overall, it's been quite stable through some pretty significant drops. So it is battle tested, but there are still things where it struggled to kind of maintain its like perfect $1 peg. Sovereign has done some things that will allow that to not happen, and there's the ways that you can easily just swap from ZUSD, which is like the stablecoin that's minted, into whatever other stablecoin you want. If you want Tether or USDC or BUSD, the Binance one, or eventually we'll just kind of add like bridges where you can get dollars off, and so this will help to maintain and stabilize the peg. But to answer your question, like why have algorithmic stablecoins not taken off as much anymore? It's hard to say. I mean, the reality is these centralized stablecoins like Tether and USDC, they're monsters. They have amazing teams, and I don't want to take anything away from them, but those are the most proven. They are the most consistent. They have the greatest amount of Lindy, and so I don't fault people for going with those. But over time, like those are not compatible with this kind of Bitcoin ethos and this Bitcoin vision that we want. Like I'd mentioned this before, but when you're holding those like those tethers, like those were ultimately minted by putting savings into dollars into fiat. By using something like Zero or ZUSD, it's like we're supporting the Bitcoin ecosystem, like we're supporting the Bitcoin collateral. And I think over time, like people will recognize that, and they will go more towards these stable coins. Also, as a point of clarity, like the term algorithmic stablecoin gets thrown around a lot, especially after like the Terra Luna debacle. Like that is a completely separate type of stablecoin that wasn't backed by anything. It was like it didn't actually have any collateral backing it. So like to call that an algorithmic stablecoin and like what something like Liquidity or what Zero is doing is completely incompatible in my opinion.
Yeah, certainly. I mean, they're totally different things. And one obviously was a catastrophic failure. The other one, or the others, are working in reality. I want to kind of end the podcast somewhat with your view of like what hyper Bitcoinization is. I know you talked about how you're a fan of this credit being built off of Bitcoin. Right now, it seems like the dollar is like the main credit that people are utilizing with Bitcoin as collateral. Do you think the dollar will always exist, or will people be borrowing something else against their Bitcoin? How do you think about this?
I mean, I think in the short to medium term, like the dollar is not going anywhere. And so it'll be kind of like this whole model that we just described, where people use Bitcoin as their savings, as their collateral, as the kind of like 21 million that can't be debased, and they'll borrow dollars against that. The dollar will continue to devalue, our Bitcoin will continue to increase in value, and it'll be this like beautiful, kind of synergy. In the long run, maybe the dollar exists, maybe it doesn't. But to your point, like I don't think that eliminates, credit money completely. Like I could totally see, some new credit money, a kind of like stable coin that is stable according to the actual like goods and services, like a basket of goods and services in the economy. So the dollar doesn't exist anymore, but we have Bitcoin, which the purchasing power kind of depends on the productivity in the economy. Like if technology is driving prices down, you'll be able to purchase more with your Bitcoin. But there will inevitably be this like contingent of people that want to know like, hey, 10 of these units, bought a barrel of hay last year, and like I can still afford that barrel of hay, with 10 units. Like there's going to be some sort of like measurement that people want in order to be stable. And so I could see people, using something like that as a substitute to the dollar. Admittedly, I haven't thought about that one too deeply, but I do want to hammer home this point that like I just don't think it's possible literally to eliminate credit money completely. Like if I lend you, Joe, like 1 Bitcoin in the future in this hyper Bitcoinized world, like what I receive in return of that is some sort of IOU from you, whether it's like a verbal agreement we make right now, or like a written piece of paper that says, hey, 1 year from now, you owe me 1 Bitcoin back. Like as soon as we make that credit arrangement, like that loan and that borrowing, like we have just issued a brand new form of money. Like I have 1, Joe dollar, and that is, worth the fact that you owe me 1 Bitcoin a year based off of like the expectation that you'll pay me back in the interest rate. Like that creates a brand new form of money instantaneously, whether we like it or not. So even if we started from this idea of a hyper Bitcoinized world, everybody's saving in Bitcoin, like there is no other money whatsoever. Naturally, like new monies will form. This hierarchy of money that kind of like Nick Bhatia talks about will automatically happen. Or we'll put money into custodians and they'll start issuing IOUs. Like it's just impossible. So what I want to hammer home from this like podcast is like credit is inevitable. Like we can't escape it. So we have to build it on our terms, which means backed by Bitcoin, and we have to build it on chain, which means that there's no centralized custodians, and that we can always see the kind of the backing and the liabilities that are created. And this will usher in this like beautiful, self-accountable world of Bitcoin free banking.
Yeah, it's going to be very interesting to see how Bitcoin, changes economics in the future. It's something that I've said in the past. I wish there were more academics studying like what, life with Bitcoin would be like, because I don't think, many academics take Bitcoin seriously to begin with, but it has been growing like pretty steadily over, the past 12, 13 years. And if we go on another bull run, I would think that they've got to start taking it seriously. But I thought that the previous bull run. So I don't know if it will actually happen. It may just be a slow growth, and we'll have to just figure it out as we go. But yeah, I think this is a good spot to wrap it up. Where can people find you, learn more about you? And I know like a lot of your thoughts that you shared today were very interesting. Are you potentially like working on a report or something that you might share about your thoughts on credit and Bitcoin?
Yeah. You can find me on Twitter, David_Seroy, Seroy. Sometimes I'm a Bitcoin reply guy, so I apologize if there's any good content or not. And then I am writing a little bit of a paper, small, manageable, 4 or 5 pages that hopefully is getting published here in the next few weeks. I think it covers a lot of thoughts that we just went over. And if people want more, we could write a longer form piece, but it should be enough for people to kind of digest and chew on, and then throw some critiques at me.
Awesome. Well, thanks for coming on the podcast, David.
Thanks, dude. See ya.